Now it's Friday, and that means it's time for 3 buys and a bail, and it's December, so that means unnecessary holiday themes. Lido Advisors Chief Market Strategist Gina Sanchez is here to give us the 3 stocks she wants for Christmas and the 1 lump of coal she wants to avoid. Gina, welcome. Let's start with Amazon. Yeah. It's coming off a strong November. They saw those record-breaking sales over Black Friday, Cyber Monday, and the announcement of Q, the AI chatbot for business. Why do you want this gift for Christmas?
Look, Amazon has continued to put one foot in front of the other. There was also some concern that there might be a slowdown of AWS sales, but that looks like it's stabilized. And in fact, it could be hitting an inflection point, meaning that that will continue to add to already growing advertising numbers. And like you said, that retail sales. And Amazon is the go-to when purses get tight, when households get tight. People are no longer going to Walmart. They're going to Amazon. And I think this is probably going to be, a trade that will continue to go through the holidays.
Already up 74% year to date. So you are sticking with it. The next name, not one I would expect to see on your list. It's Roblox, making up a ton of lost ground. It's up 58% off its 52-week low from back in September. They're expanding advertising and e-commerce. Management says it's uniquely positioned to capitalize on AI. Why does this one make your wish list?
So this one's an interesting one. I agree this normally, isn't one of my top picks because it's still not a profitable company. However, they are back to near their IPO price. And if you look at what they're doing in terms of expanding their offerings, they do look like one of the few companies that actually has a pretty strong outlook going into 2024, which is a time when a lot of companies are starting to guide down. This is one that is 15 years in the making. It doesn't look like they're going to be profitable anytime soon, but it does look like they are making up quite a bit of lost ground.
All right, I think you just have holiday on the brain because your next one, too, Mattel, which is positive for the year, but less so after giving that guidance Citi called conservative. They're saying the toy maker has gained 60 basis points of market share year to date amid the smash hit Barbie movie. And there's a Hot Wheels movie coming down the track, apparently. So you want this for Christmas.
Yes. In fact, I want a CNBC contributor Barbie complete with laptop and Padcaster.
Why don't we have one already? That's the question.
That is the question. But seriously, I do think that they were overly conservative. And if you look at sort of the effect that Barbie had on Halloween, it was the go-to costume. I think it is going to be the go-to gift for the holidays. And if there's one segment, age population that you don't, skimp on at Christmas time, it's the children. And so I do think that there is, more than meets the eye here. And I think they are being overly conservative. This talk was really hit because of that.
All right. I'm looking forward to that Hot Wheels movie, potentially, myself. Let's move on to your lump of coal. You don't want to see, if you see Etsy in your stock and you are running, they've been down 34% so far this year. Canaccord is still bullish on high-margin international sales, but they've warned the environment remains highly promotional. This one is one you want to avoid?
I think I do, because if your choices are Etsy versus Amazon, you just get more bang for your buck on Amazon. And so while the company may have segments of high margin, it's just the outlook is not as good. The valuation on a comparative basis is not that good. Etsy is trading 20 times forward earnings. Amazon is trading 32 times forward earnings, but Amazon is just a much bigger company and better value for that 32 times.
Although the stock's up 7% on that earnings beat today.
True. But this is just one that we're avoiding.
All right. And into 2024, do you want the S&P under the tree or no? You pick any asset in the universe?
I think the challenge in 2024 is that a lot of the bad news that we thought at the beginning of the year we thought would hit around this time has been pushed off to 2024. And in fact, the retail outlook, if you think 2023 holiday season is going to be challenging, 2024 is expected to just continue to be a slog. And so, I think that we are probably going to continue. And the other thing is that the Fed just came out today basically saying, don't expect us to ease anytime soon. And if that's the case, then that higher for longer trade isn't a great outlook for 2024. So I think that you end up just sort of bumping along. 2024 could be sort of a lost year for the S&P.
Interesting. You might be the first to call it. Gina, thanks so much for joining us today. We appreciate it.
Thank you.
Gina Sanchez with Lido Advisors.